Welcome to my YouTube channel, and my name is Mohammed Iqbal. Missing a mortgage payment can be stressful, but it doesn't mean you'll lose your home overnight. In fact, most lenders provide a 15-day grace period before charging a late fee. During this time, you can still make your payment without affecting your credit score in most cases. However, once that grace period ends, late fees begin to accumulate. The key message here is simple. If you're going to be late, act quickly. The sooner you make the payment, the easier it is to avoid bigger financial problems later. If your payment remains unpaid for 30 days or more, the situation becomes more serious. Your lender will report the missed payment to the credit bureaus, which can significantly lower your credit score. You'll also begin receiving reminder letters, emails, phone calls, and notices from your lender. During this stage, communication is extremely important. Ignoring these notices won't make the problem disappear. Instead, contact your lender immediately. Many lenders are willing to discuss temporary solutions if you reach out before the situation gets worse. Once you reach approximately 90 days without making your mortgage payment, your loan is generally considered to be in default. At this point, your lender may issue a notice of default, beginning what's known as the pre-foreclosure process. While this sounds alarming, you still have options. Depending on your lender and local laws, you may still be able to catch up on missed payments, negotiate a repayment plan, or explore other assistance programs. Time is critical, so taking action now can make all the difference. If no solution is reached, the lender may begin foreclosure proceedings. During foreclosure, the lender takes legal action to recover the money owed by selling the property. Depending on where you live, this may happen through the court system or through a power of sale process. Foreclosure can have long-lasting financial consequences, including severe damage to your credit and difficulty qualifying for future loans. That's why it's always better to seek help before reaching this stage. There are many misconceptions about missed mortgage payments. One common myth is that missing a single payment automatically means you'll lose your home. That's simply not true. Another myth is that lenders want to foreclose immediately. In reality, foreclosure is usually the lender's last option because it's expensive and time-consuming. Most lenders would rather work with borrowers to find a solution. Understanding the facts can help reduce panic and encourage better decision-making during difficult financial times. If you're experiencing temporary financial hardship due to job loss, illness, or another unexpected event, forbearance may be an option. Forbearance allows you to temporarily pause or reduce your mortgage payments for an agreed period. Payment deferral may also move the missed payments to the end of your loan. Keep in mind that these aren't loan forgiveness programs. The payments still need to be repaid, but they can provide valuable breathing room while you recover financially. Another possible solution is a loan modification. This permanently changes one or more terms of your mortgage to make the payments more affordable. Your lender may reduce the interest rate, extend the loan term, or even change certain loan conditions. Loan modification is generally intended for homeowners facing long-term financial difficulties who can still afford a lower monthly payment. It's often one of the best alternatives to foreclosure when temporary assistance isn't enough. If your financial situation has improved and your credit is still in good standing, refinancing could help lower your monthly mortgage payments by replacing your current loan with a new one. Another option is reinstatement, where you pay all missed payments, late fees, and penalties in one lump sum to bring your loan current. These options generally work best when action is taken early, before the loan enters advanced stages of default. Sometimes, selling the home is the most practical financial decision. If you still have equity in your property, a traditional home sale may allow you to pay off the mortgage and keep the remaining proceeds. If your mortgage balance is higher than your home's value, your lender may approve a short sale, allowing the property to be sold for less than the amount owed. Although it's never an easy decision, selling before foreclosure can significantly reduce long-term financial damage. In certain situations, bankruptcy may temporarily stop foreclosure through what's known as an automatic stay. Chapter 13, in bankruptcy law, allows eligible homeowners to reorganize their debts and create a repayment plan while keeping their homes. Chapter 7 may eliminate some unsecured debts, but it doesn't necessarily prevent foreclosure permanently. Bankruptcy is a complex legal process, so it's essential to consult an experienced bankruptcy attorney before making this decision. As we've discussed, there are several ways to avoid foreclosure, and each option has its own advantages. Forbearance is best for temporary financial hardship. Loan modification works well for long-term affordability. Refinancing requires sufficient credit and home equity. Selling the home may protect your remaining equity, while bankruptcy can provide temporary legal protection in certain circumstances. The right solution depends on your personal financial situation, so professional advice is always recommended. If you're struggling to make your mortgage payment, don't wait until it's too late. First, review your finances carefully and identify areas where you can reduce spending. Contact your lender as soon as you anticipate payment difficulties. Gather important financial documents such as bank statements, pay stubs, tax returns, and hardship letters. Finally, consult a trusted mortgage broker, housing counselor, or financial advisor who can help you understand your available options. Acting early is your strongest defense against foreclosure. Let's wrap everything up. Missing one mortgage payment doesn't automatically mean you'll lose your home, but ignoring the problem can quickly make things worse. Understand the timeline, communicate with your lender, and explore available solutions like forbearance, loan modification, refinancing, selling the property, or bankruptcy if appropriate. The most important lesson is to act early. Thank you for watching. If you found this video helpful, please like, subscribe, and share it with anyone who may benefit from this information. I'll see you in the next video.